What's up everyone, welcome back to Earn It, Save It, Invest It. In this video I'm going to be breaking down if the HIMS short squeeze is running out of juice. It just went down 7% and it's down 13% from the top. So I'm going to be breaking down if we should be expecting more dropping from the stock, or if we should be expecting to see HIMS go up a lot more, as well as going over the oil situation, right? They're calling it, this is historical about what's happening with the Iran. So the Iran war. So we're going to kind of go over quickly what happened the last time in the stock market. Did something pretty surprising, and I'm gonna go over it. So really quick, just give me a like and subscribe. My computer shut off. This is late night. I literally was at the end of my video and everything shut off. So I'm gonna go through this quickly, and sorry if I'm a little tired and upset, but is the HIMS short squeeze out of juice? Now it went down about 8%, right? From that was today. It's around 23, and it's about 13% from the top. Now remember, this is Thursday. It's actually going to be Friday, March 13th, but the end of Thursday. And, is this going to be the end of the HIMS squeeze, right? Now it reached over 27, and now we're just under 24. Does it have any more to go? Robinhood actually says that there's been more shorts added. Like more shares have been shorted. So maybe the bears are doubling down on this, and I'm totally fine with it as a shareholder. Do it because I think the stock will go up. And so whatever, do that. But there might be more actual shares that are shorted. Let's go over what happens when HIMS goes on a run, right? This is important. What happens when HIMS goes on a run? It went up 120% in 46 days, 145% in 91 days, 177% in 40 days, 154% in 32, 56 in 38 days, 47% in 58 days. Now you're probably, hey, Evan, these things, that's my name, Evan, if you probably didn't know. The stock dropped. It went up 120%, but it went right back down. Yeah, it went up 177% in 40 days, but it also went right back down. Yes, I understand. HIMS is volatile. Most of this time, it was going good. Everything was actually good, fundamental. This had to do with all the GLP-1, then the shortage ended, their deal with Novo started, and then it ended. There's a lot of that kind of drama. So when that kind of stuff happens, it's going to have a lot of big swings. This, yes, it went down a little bit, but it also continued to go up because the business was good in the fundamentals. It was growing well. But again, when you see how far it can go up a lot. So just understand that. So I'm also going to go over if the Iran war can make stocks crash. Really quick, it did go down pretty significantly on Thursday. The Iran war, Trump says the war's going well, but the Iran supreme leader says it's the son, so his whole family's gotten obliterated basically. He's calling for all the bases that host U.S. forces to close or attacks will continue, and Israel has started a new extensive wave of strikes on Tehran. And then Iran's new supreme leader vows to keep blocking the Strait of Hormutz as oil prices spike. So again, he's just blocking all the oil, which is about 20%, and it's just causing oil to go up and up and up. The index is not doing well. The Nasdaq's it's over 1% down. S&P's over 2% down. The Dow Jones is over 4%, and the Russell 2000 is over 5% down. And all while oil is up 35%, right? Look at them, they're all down there, and then oil's up 35%. Oh, I wonder why. Mag 7. Right, we got over here, we have Nvidia about over 1%, Microsoft up 1%, surprisingly, right? These have been hit pretty hard recently. Amazon about 1%, Tesla's barely down, Google's down about 0.5%, Meta down over 1%, and Apple's about 3%. But again, that compared to oil, nothing, right? Oil dominates. So oil is dominating right now. It is at about $100 per barrel. So historically, the U.S. stock market often experiences an immediate short-term dip following the news of a bombing or start of a war, but typically recovers, even rallies after the following few months. This pattern, sometimes called the war puzzle, suggests the markets fear uncertainty rather than the war itself. Now, yes and no. I'm going to kind of go over why. This conflict with Iran is causing the largest, most severe oil supply disruption in history, surpassing 1956 crisis. This closure, which handles 20%, is causing expected 8 million barrels per day drop. So the Scale International Energy Agency describes this as the largest supply crunch ever by a country mile. And so we have over here major disruptions: 56 crisis, 1973 oil embargo, and 97 the 79 Iranian Revolution. So this crisis happened 1 week and 2 days. Didn't do anything to the stock market. We don't need to worry about that. But the 1973 oil crisis, by 1974, the oil had gone up 300%, from $3 a barrel to $12 a barrel. Right? That's a lot. And it says it was the first oil shock. That's what they called it. Impact. So it says because of this oil price shock and the accompanying market crash, because it basically really crashed the market. It was the first discrete event since the Great Depression to have a persistent effect on the U.S. economy. So what happened? It went down 46% in 638 days. It didn't reach that peak again, that level, for 3,500 days. It took almost 10 years. Almost 10 years for us to recover from that. So as you can see, this war, if it continues, if they really start putting pressure on the oil, it could last a while. Now, the war, the embargo didn't last that long, right? It lasted about a year, but as you can see, this is about how long it lasted. About a year or so. This is, it's almost 2 years. But it took 10 years for the market to recover to these levels. So that's what it meant by it had a persistent effect on the economy, a long-lasting effect. So we just have to hope that these effects of the oil prices and everything don't go up a lot, too much. I mean, it's gone up a lot. Let's hope it doesn't go up too much, because it will start really affecting us. It's going to start affecting the economy at some point. As much as we don't want to, we want to think that we're going to be strong and the market goes up and up and up. At some point, it will have an effect, and it has dropped before very significantly. We've seen 46% crashes with COVID and all of that stuff. In 2018, it went down about 35%. We've had some, 2022, some of the stocks, individual stocks, went down 80%. So, it's not like it's unprecedented to see the stocks fall like that, but it's also accompanied with the economic effects. What kind of effects is it going to have economically? So, again, that's just my 2 cents. It is super late at night. My computer already crashed. This is going to be less than 10 minutes video. That's insane. I think I had 20 minutes before, kind of going over stuff more. I'm tired. Thank you for watching. Please give me a like and subscribe. I appreciate everyone. All the parents out there that are hustling and doing and grinding to try to do something. That's what I'm doing here. This is what I like to do. I want to get out information, so I'm willing to sacrifice a few hours of my sleep and a few hours of my time to do this. I hope you guys appreciate it. I appreciate everyone who likes, follows, subscribes, all that, comments. So yeah, go ahead, give me a like and subscribe again, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.